stock market has increased by more than 25% during 2023. However, I've still managed to find 3 stocks that are trading at great valuation and that potentially could be great pickups for your portfolio here in January 2024. But before we get to those, then in case you're new to the channel, then my name is Casper and here we strictly talk about investing and financial freedom. So if you really like investing and you want to retire early, well then press that subscribe button below. And also guys, please leave a comment below the video on which stocks you're looking to buy here in January. It would be very interesting to hear your thoughts as well. Anyways, going straight into the first one on my list, and this is actually a dividend aristocrat. And that is Exxon, ticker symbol XOM. And this is one of the largest oil and gas companies in the world. And even though there is a lot of focus on green energy and sustainability, then there is definitely still a high demand for oil and gas, and that is not going to change anytime soon. However, even with that said, then is Exxon actually investing heavily into green alternatives, and they are not going to go anywhere, no matter what happens within this industry. And they currently have a share price of roughly $100. And when looking at their performance during the last month, well then they are down by 4%. And year to date, well then they are down by more than 6%. And they are trading pretty close to their 52-week low as well. And they have a price to earnings ratio of almost 11. And that is actually 32% below their 5-year average. And that is definitely indicating that Exxon right now is trading at a very good valuation. However, let's have a look at their dividends. And they currently have a dividend yield sitting at 3.8%. And that is very, very nice. And a payout ratio of 35%. And a 5-year growth rate in their dividends of 2.64%. And even though the growth in their dividends isn't that high, then it is still growing every single year. And that is extremely nice as an investor. And they have been increasing their dividends for the last 25 years in a row. And that does officially make Exxon a dividend aristocrat. Exxon is a great company that is trading at a very attractive valuation. So if you are looking for a solid dividend company, then I would highly recommend you to look further into this one. So moving on to the second dividend stock to buy in January. And here we have Hershey, ticker symbol HSY, which is the company that is making a lot of different sweets. And they are heavily impacted by commodity prices, especially cocoa, which is being used a lot in their production. And as you can see on the graph, well then has the price for cocoa increased significantly during 2023. And that has resulted in a negative impact on their profitability. However, the company is starting to look really attractive, as the share price just dropped by another 0.16% during the last month. And they right now have a share price sitting at $186. And year to date, they are down by almost 18%. And they are almost sitting at their 52-week low as well. And they are trading at a forward price to earnings ratio of 20. And even though that might seem a bit high, then it is actually still 21% below their 5-year average. So there is definitely also a bit of a discount to be found for this stock right here. But let's have a look at their dividends as well. And they currently have a dividend yield sitting at 2.56% and a really nice 5-year growth rate that is just above 10%. And they have also consistently been increasing their dividends for the last 14 years in a row. Overall, then is Hershey a really nice company that is trading at a very good valuation, and they are increasing their dividends at a very fast pace, and that is exactly what us dividend investors likes to see. But anyways, moving on to the third stock of the day, and that is going to be Johnson & Johnson, ticker symbol JNJ. And I can already say right now that I'm definitely going to be buying Johnson & Johnson here in January. I simply can't resist buying Johnson & Johnson at the current valuation. And I do already own 7 shares of Johnson & Johnson that has been bought at an average share price of $172. So right now I have the chance of increasing my position even further at a very nice valuation. And when looking at the share price performance for Johnson & Johnson during the last month, well then they're actually up by 3%. However, year to date, they're down by 12%. The current price for Johnson & Johnson is obviously very, very nice. However, the real reason why you should buy Johnson & Johnson is because of their dividends, and they are very hard to match when it comes to dividends. They currently have a dividend yield that is sitting just above 3% and a payout ratio at 34% and a 5-year growth rate in their dividends of almost 6%. However, the best part about their dividends by far is the fact that they have been able to increase this dividend for the last 61 years in a row, and that is completely insane to think about. You have the chance right now to buy Johnson & Johnson at a discount. It is one of the most popular dividend stocks for a reason. And I don't know about you, but I'm definitely not gonna miss this opportunity. I do think all three of these stocks will make for great contenders if you are looking for some additions to your portfolio. And having said that, then there are also some other discounted dividend stocks that are worth mentioning. And the first one is going to be Starbucks, that is currently down by more than 5%. And Starbucks was very close to making it to today's video. And I simply do believe that it is a great buy at the moment. And another one that is worth mentioning is Chevron. And they are down by more than 14% year to date. And that is definitely also a great buy at the moment. But we also have another medicine company, and that is Pfizer. And they are down by more than 44% year to date. So they are definitely also trading at a great valuation. These are all of the stocks that I do think you should be keeping your eyes on if you are looking for some additions to your portfolio. However, if you do think I missed anyone, then please let me know in the comments below. Thank you for watching and see you in the next one.